work more with mother.com. Just wanted to take a look at the stocks that you had sent me that were on your watch list. To apologize for the delayed response. Honestly, it kind of skipped my mind there for a minute, but let's get to it here. And of course, we are doing this March 10th, 2016. So the key here is all of these are pretty much long ideas, and let me share with you, or just let me share the stock ideas here. These are the stocks that you're watching here for potential breakout or entry, and all of them pretty much, they look decent. There's really nothing wrong with them. The key here, in my opinion, is whether the market, and let's just take a look at the SPX. The key here is whether the market is moving higher or not. So for you to be able to play any long side ideas, we have to see the S&P 500 clear this resistance. That way we can know that the long ideas are gonna work. Otherwise, if the market is not going any higher in the current market environment in the next couple of days or weeks, if this weekly RSI stalls the market from moving higher, then the ideas will not work in the short term. Take a look at the daily here for the SPX, and it's coming back to test this line, which has been a problem. And so if it can clear those two lines on the daily and on the weekly, it might have a chance of moving higher, and those ideas will most definitely work. If we take a look at the 3-year monthly for the SPX, this is very good action on the monthly chart. And so here the key is, if the market can continue building on to this double bottom support on the monthly RSI, then really our job is to find breakout ideas and hold our nose. So it's a question of which one is which thesis is going to work out. Either the monthly charts are strong enough to propel the markets higher, and so we have to be looking for breakouts because they will be the strongest moving instruments, or on the XPX right now the weekly is becoming a problem. And keep in mind that we are trading above 50, having closed above 50 in the past week during this nice gain for the week there. And now there's a possibility that if we have a down week, that the market moves its weekly RSI below 50 and we get a strong reversal lower. So you don't want to be a buyer of the market in the face of a potential strong pullback. So we have to be gauging that possibility. Of course, if the market is to move higher, the best chance for the market is A, to clear this weekly RSI resistance line, or to clear the daily RSI resistance line. So either way, we need to be above those two lines for us to even consider any long side ideas. So the key is always begin with the market. Let the market tell you that it's bullish. Then find ideas that might, have a nice showing if the market moves higher. In terms of the stocks themselves, they all, as you are aware, and that's why they are on your watch list, good job. They are all breaking out as of right now. On the monthly charts, the RSIs and the MACDs are trading at 3-year highs pretty much for all of them. So probably we just save time by not just looking at one of them here. So they all meet the minimum requirement with the MACDs and the RSIs at 3-year highs. That's what you want to see. The issue here is the general market. Also here we did see that if you take a look at the weekly, as of right now, in terms of timing, we haven't seen a fresh break. Of course, you can always use either this recent break as your entry on hindsight, or you can wait for it to clear this 2015 weekly closing high, which is a little bit higher. Either of them are a legit entry level. So if you miss this breakout, you can always set an alert for the next breakout. Yes, it's gonna be 2 points higher, but still that would confirm that A, the stock is doing well already, and 2, that the market has joined and the market is moving higher. And so the other ideas also look good, and I'll just share the, take a look at them. In fact, I'm surprised that a stock in this sector, real estate sector, is actually, I believe it's a real estate sector, is actually breaking out. The buy point there was 80. around $80, the previous monthly closing high. So on a breakout perspective, RSI is trading at 3-year highs. Looks good. All we need is for the market to coil and point higher. MACDs are good. Everything's good on this one. Trading at 3-year highs. This is very strong. If the market was bullish, this is what you want to look for. You want to look for stocks that are moving above 69.1, and you want to look for stocks that are also making 3-year highs. So this is very strong. The only problem here is market conditions. If the market was already breaking out and you were in a bullish phase of a bull market, this is what you want to go for, because it might look extended, but stocks like this ones go to trade in the 150s, 160s, 200. As long as the market stays good, that would be a good candidate. ELLI also looks good, and here we can take a look at the weekly and clearly see that if you want to play this, you probably want to wait for it to move above last week's closing high there and for a buy point. So you can set a trigger point there for a future breakout. Right now we can see that if you take a look at this line here, there was a break in August there, and now the market itself has done this, and not you, not I. The market has come back there and seem to be stalling right there. So that could be a problem there. The best thing to do is wait for the next breakout. That would be what I would do, because we want to make sure that the market is already showing strength before we go for the next buy candidate. Here, my little bit of a issue with this stock is, if you take a look at where it's trying to break out, the RSI is below 38.2, and generally speaking, you want to avoid stocks trading in this area. They just tend to be bearish. So even though, yes, it could start eventually building higher to 3-year highs, even though it's close to 3-year highs, I just don't like the fact that it's trading below 50, trading below 38.2. The true momentum stocks tend to be moving and breaking out while they are already above 38.2. Could it move higher? Yes. The issue here is, of course, also that the MACD is not right now at 3-year high. So this one I would kind of not want to play it for now. Of course, you can always use the recent weekly closing high, and again here I'm looking at the average price, 11,000 shares per week, on a weekly chart. I think this one is one to avoid. Very low volume, very low volume. So that one needs to be at least just for now discarded. FRAN, here we see that the RSI is above 50, breaking out to 3-year highs. MACDs are moving to 3-year highs, or at least one of the MACDs is above 0 and moving to 3-year highs. That looks good. You can see that in terms of timeliness, it is just now moving above the recent monthly closing high of January. So it looks good. The only thing we need here is market confirmation, but this one looks good. Now if we take a look at ROVI, so we can see here, yes, it is at 3-year highs, but it is coiling down on the monthly RSI, which might be a problem. And I think that the way it's shaping up, it could eventually look something like that, which would be something like a uniformity rejection, and I think that could be a problem. So best thing to do here is quite simply wait for it to move above the recent monthly closing high, just under 23. Set an alert. If it ever breaks out above that, then that's when you want to go back and take a look at the stock. But on a long-term monthly view, I just get the sense here maybe this one is looking to stall. And what you can see here, if you take the previous monthly lows and extend them out, it gives you an interesting perspective. There was a break here that brought the stock off the highs, and since then we've been stalling every time we hit that backtest line. So that's why I'm leaning towards this being a failure here, because if it calls back below that blue line, that would confirm another top for a multi-month move lower. So I just get the sense personally that around here it just doesn't look right to me. Also we can see that, and remember I'm just doing this on the fly, and just I see here another break. There's no hard science to this. You're just trying to figure out what the stock responds to. So all these lines have no hard science, but I can see that there was a break off this level here in 2007, 2008. Draw a line from there and you can see again there was a break here which began this drop in 2011, so somewhere there. Keep in mind that when we were moving higher, so let me show that, during the period when the stock was moving higher here, it was trading above the red line, which is this period here. And again we are coming back, and as you can see we seem to be stalling on this red line. So even though on the 3-year monthly it looks like it's breaking out, there's a lot of suspicion here in my opinion. Also let's take a look at the next one on the list, and it is WMB. Let me make sure I'm not missing anything here. And yes, it looks great, back above 69.1. These are the leadership stocks we need to be watching for in case the market moves higher. Let's take a look at the weekly chart. Alright, and here we can see that it is, you know, if you take a look at this 2-year weekly chart, you start seeing a little bit of a problem here, and it is this volatility. This is not what you're looking for. This is too volatile in my opinion. Even the last couple of months this has been all over the place. I would probably be looking to avoid this name. Let's take a look at the long-term monthly chart just to see how it responds, and there you have it. So the long-term monthly view confirms what the weekly chart is doing. Is this is a very tough stock to trade. It is all over the map, all over the place. Just I would avoid that. I don't care that it moves higher, trades in the 90s, in the 70s. I think you need to avoid this one just based on past history. You can take a look here at the monthly, and somewhere around here stock tends to react negatively. Moved back below the red line off the highs there, broke below here off the highs here, rejected here in 2011 off the highs there, came again 2011 off the highs there, and now we are back in this general area. I think this could easily be a stall stock, so I would avoid that. And again, the key here at the end of the day to keep things simple is what happens on the weekly chart. Right now we are looking at the S&P 500 move back below 50, confirming that this is a problem. The more the S&P 500 trades below 50 for this week, the more it might stage a strong down week. So anyway, I'm really not sure we should be playing the long side is the bottom line. The charts might look good individually. The problem is we have a market environment here that seems to be stalling as of right now. And of course, because the monthly charts are looking good, and just for the sake of clarity, let's take a look at the long-term monthly view for the SPX. And what you see here is we have to be very respectful of the idea that holding the 50 level on the weekly for the markets is a big deal. So this holding here on the SPX could suggest that if the S&P 500 clears the weekly resistance and the daily resistance, then that is when we can go after some of these ideas. Eric Muadh, Muadh.com. Let me know what you think. Peace and blessings. Yes, I am out. Mwah.